In our previous session, we talked about the different journal entries, and we also discussed about their posting to the ledger accounts. We also had a discussion on the balancing of these all ledger accounts. We understood the point that closing balance is written onto the side that is shorter in the respective account, whereas it is called as the balance of the side which is higher. So if we have written the closing balance on to the credit side of the respective account, we call such balance as the debit balance because it is there because of the higher debit side. Similarly, if we have written the closing balance onto the debit side, it is called as the credit balance. However, remember a point, when we open the account in the next period, like हम लोग बहुत सारी एंट्रीज लिख रहे हैं और फिर एक पन्ने से हमको दूसरे पन्ने पे जाना है, एक क्वार्टर से दूसरे क्वार्टर में जाना है, एक मंथ से दूसरे मंथ में जाना है. In all these cases, when we write the opening balance on the next page, that opening balance is written on the side to which it belongs. Means भले हमने क्लोजिंग बैलेंस क्रेडिट साइड में लिखा है, बट ओपनिंग बैलेंस हम लोग उसका डेबिट साइड में लिखेंगे, to the side to which it belongs. If it is belonging to the debit side, if it is a debit balance, it is belonging to the debit side, and that will be written on to the debit side when it is the opening balance. So that's about the concept of closing and opening balances. That's about the concept of balancing of ledger accounts. As I told you in the previous session that we will be talking about the subsidiary book concepts, because if you must have observed on the other day, we were having multiple sales entries, we were having multiple purchase entries. For those multiple purchase and multiple sales entries, in fact, before that, we have to talk about the concept of combined entry also. Yes, we'll first talk about the combined entry and then we'll go into the subsidiary book. As I've already started talking about, I'll just finish up the base concept of that. There were multiple of the sales entries. Now, 3 cash purchases were there, 2 credits purchases were there. For those 3 cash purchases, you had written the journal entry, if you remember, purchase account debit to cash account, purchase account debit to cash account, purchase account debit to cash account. Every time you are repeating the whole of the journal entry, you are creating the duplication of your work. And at the same time, it creates a kind of monotony as well. You have been continuously recording the same kind of transaction in the same fashion again and again and again. So to avoid such monotony, to bring in more efficiency, to avoid the duplication, to avoid the redundancy, we started following the concept of subsidiary books. Now, how these subsidiary books are written, we'll talk about that. We'll discuss that. But before that, let me come on to the concept of the combined journal entry. Now, this is applicable only when you're preparing the journal entries. When you're preparing the subsidiary books, in that case, the combined journal entry concept is not applicable as such. Why and how we'll be discussing that when we will start talking about the subsidiary books. For now, we'll focus on the combined entry. Now, what do I mean by combined entry or combined journal entry? Understand and observe. Till now, what we saw was that in a transaction, there are two different accounts getting affected. But when in a single transaction, you find that there are more than two accounts getting affected. And instead of passing the separate journal entries for them, you are passing a single journal entry for all the accounts getting affected in that particular transaction. We call such particular entry as the combined journal entry. I repeat, in a single transaction, when multiple accounts are getting affected and those all accounts are given the effect within a single entry, single journal entry, we call such entry as the combined journal entry. Remember a point, even though we are passing a combined journal entry, even though we are giving the effect to multiple transactions on a multiple accounts on a combined basis in a single transaction, still, even after that, the debit total of that entry will be same as the credit total of the entry. So if there are, say, two accounts getting affected onto the debit side and one account onto the credit side, the total of debit transactions will be same as that of the credit amount. Or if there are three accounts getting affected on debit side and two accounts getting affected on credit side, the total of 3 on debit will be equal to total of 2 on credit. I said this earlier, I repeat it, that combined entry is the concept only when you are writing the journal entries. When you start talking about the subsidiary books as a concept, at that time the combined entry won't be the concept, because there, in such case, you do not give the effect on combined basis, you give the effect on the individual basis for the various transactions, various accounts, various persons, various activities. That will be understanding in more detail when we'll start going into the subsidiary book as a concept. For now, I'll try to focus upon the combined journal entry. We'll write a note on that and then we'll be writing the certain examples on that. Just observe it now. Combined journal entry. A single transaction involving more than two accounts, when all accounts are given effect in a single journal entry, it is a combined or compound journal entry. Total of debit will be equal to the total of credit. Whatever is your debit total of the given transaction has to be same as the credit total of that transaction. All right. Just observe with this example. X1. Ramdeen started business investing rupees 20,000 cash rupees 30,000 of furniture and rupees 50,000 of vehicle. Observe it. There are 4 accounts getting affected in this. Which 4 account? One, Ramdeen's capital account, because Ramdeen is starting the business by investing the money. I told you that business entity concept has to be followed, because of which the capital account will come into play. Cash account, furniture account, and vehicle account. Cash, vehicle, furniture is coming into the business, and these all are brought in by Ramdeen in the form of capital. So my entry will be what? Cash account debit 20,000, furniture account debit 30,000, vehicle account debit 50,000 to Ramdeen's capital rupees 1 lakh. Correct? This is the transaction that we call as a compound or combined journal entry, in which we have given the effect of multiple debits and a single credit into a single transaction, into a single journal entry. But if you'd observe, my dear friends, the total of debit is 1 lakh and the amount of credit given is also 1 lakh. So even though you are passing a compound journal entry, even after that, the totals of debit and credit have to remain same, is what I had said, if you remember, and that thing is applying here. Am I clear for all? I'll go ahead. Let's observe another example. X2. Check issued to supplier of rupees 50,000 availing discount of rupees 2,000. There are three accounts getting affected in this. One is bank, not check. Check is only a mode of payment, only a way of making the payment. Against that, the account getting affected is bank account. Supplier account because he is the receiver of benefit, and discount account because it is our income. But out of this, bank is giver of benefit only for 50,000. 2,000 is my income for the business. Discount received is my income. And therefore, my journal entry for this will be what? Supplier account debit 52,000. You'll say, sir, he's the receiver of benefit only for 50,000. Yes, but the remaining 2,000 also need to be cancelled from his account. क्योंकि ये जो 2,000 रुपए का उसने हमको डिस्काउंट दिया है, ये हमने वापस से उसको कभी पेमेंट करना नहीं है. And that's why supplier account debit by rupees 2,000 to bank account 50,000 to discount received rupees 2,000. Am I right for all? So that's how you do the entries for the combined basis, that is multiple accounts being credited and single account being debited. I'll just present in front of you another example. Paid to supplier A and B respectively rupees 9,000 and rupees 11,000 by check, and to C rupees 10,000 by cash. Understand? Supplier A and B is being paid by check, whereas supplier C is paid by cash. And we are supposed to pass the combined entry for this. Observe it. A, B, and C are the receiver of benefit. Against the check, bank is the giver of benefit. And cash is going out. So what will be my journal entry? I said journal entry will be A account debit rupees 9,000, B account debit rupees 11,000, C account debit rupees 10,000, whatsoever is their respective benefit that they have got, to bank account 20,000, because out of the total of above, 20,000 is going from bank, to cash account rupees 10,000. I hope you have understood the concept of the combined journal entries. I would like you to write these all notes and examples, and then we'll continue. Just write this. So let us now start talking about the concept of subsidiary books. Mind well, my dear friends, when we are talking about the concept of subsidiary books, it becomes very much important. Why? Because When I'm talking about the preparation of my final accounts, when I talk about the preparation of my accounts, forget about the final accounts, it do get affected if I've done the wrong processing of my transaction. When I'm thinking of the rectification of errors, whenever I'm required to do the rectification of errors, that all rectification is dependent upon my subsidiary books. How do I record the transactions in my subsidiary books? Why do we prepare these all subsidiary books? And how do we do the posting of the various transactions from the subsidiary books is what we have to just talk about. I said, how do we prepare these subsidiary books? How do we post these transactions? And why do we prepare these subsidiary books? This is what we have to understand. The very first and foremost into that is why subsidiary books? Understand clearly, my dear friends, understand very carefully that when I'm preparing my subsidiary books, when I'm carrying out the activity of preparation of my subsidiary books, the very basic reason behind that is to bring in more efficiency in my transactions or in my books of accounts, and to bring in more kind of results. Why? Because if I'll keep on writing the journal entry for each and every kind of transaction, if I'll try to record everything in the form of journal entry, every time I am repeating certain things for the similar kind of transactions. When my number of transactions were limited, when I was doing limited number of transactions, in that case, it was possible for me. There was nothing wrong in that. But in the current scenario, in the current cases, what we have been observing that our number of transactions have increased, and that have increased with the mammoth sizes. A small business is doing thousands of the sales entries in a year. If you take the example of the big conglomerates, the big large organizations, they are having hundreds of the sales and purchase entries every day. And if they will have these kind of multiple level of transactions in a single day, still recording everything through the journal will create the unnecessary wastage of the resources. Like take simple example, 3 different cash purchases entries. You had passed the entries as purchase account debit to cash account for 3 times. Every time you kept on writing in your journal, purchase account debit, purchase account debit, purchase account debit. Instead of that, if I will keep on recording these transactions on a shorter basis, on a precise manner, but yet giving the same effect of journal entries, then it will be more efficient or not. And for that purpose, we started following the concept of subsidiary books. Understand very carefully, my friends, that when I'm preparing my subsidiary books, it is an alternate to preparation of journal, not complementary to preparation of journal. मतलब मैंने journal entries भी करनी है और मैंने subsidiary book भी बनाना है, ऐसा नहीं. That is the reason the subsidiary books are also called as the specific journals. Why specific journal as a term? Because whatsoever transactions you are writing, you're recording in your subsidiary books, those transactions will now not be recorded in your journal. That's point number 1. So a transaction will either be recorded in journal or in the subsidiary books. The subsidiary books are basically divided. The subsidiary books, I said, are basically divided based on the different types of transactions. Whatever is the specific type of transaction, that specific type of transaction comes in that specific type of journal, that specific type of subsidiary book, and that's why I said subsidiary book is a specific journal. If I am recording a particular transaction in a particular subsidiary book, it won't be recorded in any other subsidiary book in that case. So if there is a purchase ka transaction, especially let's talk about there is a credit purchase ka transaction, and if for the credit purchases, now what all will prepare, will understand it. For now we are understanding the concept of subsidiary book as such. So if credit purchase ka transaction, let's say we record in the purchase book, then that credit purchase ka transaction won't be recorded anywhere else in any other subsidiary book, or for that matter, not even in the cash book, not even the journal. If there is a purchase of transaction or purchase of goods on cash basis, and let's say for the cash transactions, we are preparing a cash book, that cash purchases will get recorded in the purchase, in the cash book and not in the purchase book again. So either you record in one subsidiary book or other, either you record in the subsidiary book or the journal, the journal proper or general journal is what we call as. You cannot have a single transaction being recorded in a particular subsidiary book as well as journal, or in one subsidiary book as well as another subsidiary book. हाँ, कभी कभी ऐसा हो सकता है कि एक ट्रांजैक्शन को आप दो अलग अलग जगहों पे तोड़ के लिख रहे हो, तोड़ के रिकॉर्ड कर रहे हो, दैट इज एक्सेप्टेड. बट सेम ट्रांजैक्शन आप यहां भी रिकॉर्ड कर रहे हो, वहां भी रिकॉर्ड कर रहे हो, ऐसा नहीं होगा. One transaction is always recorded only once. I repeat, only once in our books of accounts. एक ट्रांजैक्शन को आप मल्टीपल टाइम्स रिकॉर्ड नहीं कर सकते हो. Am I right? We'll just write a note on subsidiary book first before we start going into the various subsidiary books again. So subsidiary books. Part of journal called as specific journals, as it keeps the record of specific transactions books of prime entry like journal, transactions are recorded which are of repetitive and similar in nature. One transaction in one subsidiary book. Is it right? So that's the base of the concept of subsidiary books. Now, for what all transactions we prepare the subsidiary book? Subsidiary, primarily in case of a trader or a manufacturer, books include the purchase book, wherein we record the credit purchase of goods. We prepare sales book, wherein we record credit sales of goods. We prepare the purchase return book, wherein we record the return of goods to supplier. We prepare sales return book, wherein we record return of goods from customers, and we also prepare cash book, wherein we record cash and bank transactions. Does that mean we prepare only these many subsidiary books? Answer is an absolute no. You can prepare the different subsidiary books according to the requirement of the business, considering the basic concept of subsidiary book. This is just an illustrative list. This is the mostly used subsidiary books, and that's why I'm going to cover that only. All right. Just complete this particular note and the types of subsidiary books.